Um, Good afternoon, ladies and gentlemen, and welcome to this week's webinar. I see there's a few questions coming up at the moment, so I'll get back to those in a few minutes. I'll just talk about the week. Another depressing week from a trading perspective, or certainly from my perspective, not necessarily from yours. You may have been getting it all right. Unfortunately, I wasn't. The rally has continued throughout the week. Prior to today, we'd seen 4 days of increases on the Dow, and I think at this particular level we're roughly within about 1% of the high for the year. So pretty much back to a status quo, and when you think that we've been through one series of lockdown and potentially looking at a second series of lockdown, that's a fairly startling set of circumstances. But the underlying all of that, in terms of my approach to the markets, it's been repeatedly wrong for the last number of days, and there's certainly an attempt to get back to basics over the course of the weekend. And there are a few things I think that are influencing me that they're not meant as excuses, because there are no excuses. When you're wrong, you're wrong, and that's definitely the case where I'm coming from. But just in terms of things that are affecting me from a psychological perspective, I'm sure some of these things affect you from time to time. We spoke last week about potentially freezing when you're trading, and I know that a few or a number of you had some empathy or experience of that, so I think that was worthwhile seeing. I've just seen that the battery has exhausted itself, so rather than and that's that sums up my week, I suppose. So you're only going to have audio now. I need to charge up the battery. Unfortunately, sorry, I was running around trying to get a few things done with some personal issues before I attended this. So I will continue. I'm not the technological genius, so I presume that you're still hearing me, but you can't see me. And maybe if Sam is listening, he can confirm that to me. So apologies, there is a loss of pictures, and that, as with everything else this week, is entirely my fault, nobody else's. So in terms of the week, obviously we had the election on Tuesday, and we still have the election today. There was some, Biden is getting ever closer. In the last hour, he may well have he may well have secured the required number of votes. I've been away from my desk, but he is getting closer and closer to being the next president of the United States. The uncertainty is what I expected to happen. And markets don't like uncertainty, but the uncertainty has actually worked in the market's favour this time, or the way that the uncertainty has been assessed by the markets. Obviously, there is going to be very little change. There hasn't been this blue wave. The two separate houses in the US or in the government are going to be fairly spread, fairly even, and it's going to be difficult to pass any particular law. So one of the questions that came through from Fonz was, Fonz is of the opinion that markets are largely overpriced. He prefers to be short, but the Dow and the Nasdaq are still rising. Who is buying and what are their arguments? And I imagine what happened, Fonz, to be honest, in the week prior to the election, as you quite often see, is that there was a rotation out of equities, a big push to the downside, some noise about coronavirus at the time probably accelerating that decline, and people are reinvesting this week. So it's a whole spectrum of investors, but one of the reasons, which I was just going to get onto in terms of my synopsis of the week, is that with very little to change over the next 4 years, or or the perception that very little will change over the next 4 years, business is happy to make some decisions. There is some there is some certainty through the uncertainty that is ongoing with the elections, as strange as that may seem. And especially that is relative in relation to the technology stocks. There was a big fear that come a blue wave, a Biden victory as president, and then the Democrats taking control of both of the decision-making parts of the two houses in the United States, that he would be able to impose some fairly strict rules and regulations around the big tech stocks. That hasn't happened, and as a consequence, the tech stocks have rallied aggressively and continue to rally aggressively. A bit of a downtick during the course today, but it is just people reinvesting in the market. Fund managers again gaining some exposure to the equity markets, looking for some upside there, and possibly rotating out of one or two of the other asset classes that they might have been holding. So those really are the buyers. I think it's a broad spectrum of people. Everybody, Christmas quite often sees a pre-Christmas rally. And last year, I believe it was quite an aggressive rally into the end of the year, if I remember correctly. So some people are looking to be on board prior to that set of circumstances. So, fairly broad spectrum of people. And seeing through the uncertainty that we see at this moment. For me, in terms of my approach and why I've been going so badly wrong over the last couple of weeks, I've probably been trying to look for a bigger picture, whereas I think the markets or investors have been very much, and the markets to a certain degree, have been very much blinkered or focused, laser-like vision on the election and the outcome of the election, and the trading has gone in that particular direction. Unfortunately, I've been caught on the wrong side of it because I'm thinking about coronavirus, I'm thinking about potential lockdowns. There would never be a national lockdown in the US, but there is every opportunity or every possibility that we'll see some localized lockdowns post the new president of the United States being appointed. In the back of my head, we have localized lockdowns. We have coronavirus cases continuing to increase. We have a stimulus package that might not meet expectations. And whilst we've seen a big move to the upside, I think a lot of it is on the basis that this stimulus is coming. It's going to be big. I think it may disappoint. And when it does disappoint, that there is every chance that we will see a sell-off based on the fact of the stimulus coming. So this is, for me, it does look to a certain degree as if it's buy on the rumour, sell on the fact. But obviously there was a good jobs number again today. Jobs market looks quite robust, as surprising as that may seem, but if we do have that second wave of lockdown, the jobs market, the unemployment rate is going to increase quite dramatically. So as buoyant and as positive as the markets appear at this particular time, for me, and it may only be me alone in the world who sees some dark clouds on the horizon. So I'm cognizant of that, and whilst I have been wrong, certainly over the course of this weekend, I'll be looking back over some of the decisions. Jay is asking, will he need to add further margin to DupliTrade? For everybody, that's a personal decision. The trades will. There's a few things. Let me explain. Let me explain my own psychology when it comes to some of the trading that's gone on over the last week, and I most definitely have taken some big losses over the last 10 days or so, and I've refunded the account today. There are a few things that are working against me, and this is is as much a personal approach to trading. Sometimes minimizing or reducing the sides doesn't really work for me. I'm looking for a certain amount of exposure to the markets on each trade, and always over the last 30 years attempt to keep my trade entry at exactly the same level. I do understand that when people are taught about trading and you look at percentage of your account, that you should risk at any particular time, that can fluctuate as your account balance goes down and up. My approach to trading is very different. If you make money at the end of the month, withdraw the money and don't increase your exposure. So I like to keep everything based off of that nominal level and try to keep it at that particular point. So from Monday, I'm going to revert back to my original trade size, which is 0.25 of a lot. I've refunded the account today. There will be a reduced number of trades. The trades will run for longer, and I think the thing that probably convinced me of that today, I need the trade to be of a certain quantity to pay it the attention that it needs, and equally so. I think with the trades today, with the risk of the margin level exceeding to a certain level, or passing that particular level, I was very worried that the trades were going to run out of control first thing this morning. Stopped myself out both the Dow and DAX far earlier than I would normally have done, and then the market fell 300 points in the Dow, 200 points in the DAX, and the trades would have both been significantly in profit at that particular point. So I was left kicking myself, certainly on one occasion, probably two occasions this week. I started trading angry, which is not a good situation to be. And there have been a number of other errors that have occurred during the course of the week. Me trading, if a trade has been against me, as people who have been with us for some time will know that as that gets back to break even or close to break even, I often take a loss on a trade. Been a couple of notable occasions this week where I'm trying to generate a return out of every single trade that I haven't done that, and I need to be more ruthless in that regard and get back to the pattern or type of trading that I'm more used to. Whereas at the moment I'm cutting too soon, I'm trying to hold on to profits a little bit longer than I need to, and I'm not being ruthless enough when I regain losses during the course of the day, and I need to be, both for my purpose and for yours as well. So the answer to Jay's question, now that I've spoken about duplicate trading in some way, is that you can add whatever you want to your account if you so wish. I'm definitely not encouraging you to do that. I've put my account back into a situation where, you know, I'm able to, just as a slight bit of explanation, the account that you see on DupliTrade is my master account, which feeds other accounts. My own account is one of those accounts that it feeds. So I have both the master and I have another account which attracts the trades at a multiple of the trades that you see on your screen. So that gives you an idea of some of the difficulties I've faced this week. But like I say, again, you know, not factoring down or not factoring up when you're making money is the way that I like to approach it, and also not factoring down when you're suffering losses in your account. So if you make a profit at the end of the month, take it out. Equally so, and then you have a decision about whether you want to top up if you're losing money. But you are going to encounter bad periods during trading. There is no way that you're going to have consistent returns every single month, or it's very difficult to achieve that. So the bad periods you need to be able to ride out, and if you keep factoring up the risk that you're taking to the market or the exposure that you're giving to the market, one of those days may come when you're completely exposed to the market. And I was speaking to somebody about it this week who had some significant profits in silver, was making a lot of money in the silver market, kept reinvesting, and by the time that he took a hit to the downside because he'd added so many trades to his position, it was only a very small movement to the downside that completely wiped out his account. So managing your risk is always very, very important. So John is asking, is there any news on cable? the honest answer, John, as you know from me, is it's not something that I focus on greatly. The currencies have always been a bit of a minefield for me, and remain that. Obviously, I think what we're seeing at the moment is more dollar weakness, as you can see with gold as well, gold rallying and holding around this 1950 level, which I've sold into on a number of occasions, as you know. Sterling, if we, I've just got an hourly chart open there, so just looking back at it from a chart perspective, 131.76 was the high back in October. 4 hourly chart, we're looking for August, we go back to 134. Brexit is obviously the key determinant. Lockdown in the UK, I'd probably prefer to be short sterling than long sterling at the moment, so these rallies potentially have got a nice move to the upside. Maybe 132.50 for me would be a short position, possibly even the levels that we're at now. You go down to a daily trade, and similar sort of things, 132 even, is possibly a fairly decent area to get short. And even if you could get your stops above those levels, if you were a bit more aggressive and wanted to get into the trade at this particular point. There's a few of you who've sent me messages over the course of the week, and I appreciate all of those. There's a few people that I've spoken to today about developments going forward. So I wrote on Telegram earlier about the voice messages and some videos about the rationale and reasons and sentiment behind the trades. One of the other recommendations or requests that came in the last little while was about doing a live trading session at a certain time of the day. I think the request was for an hour. I think you'd bore. Well, probably I wouldn't charge the camera sufficiently, but you'd probably bore of me for an hour anyway. So what I'll try and do, or I think I'll do, is we'll start, and it might not be Monday, but we'll start to do a couple of times a week a live trading session. It might be around a number one week. I think one of the things in terms of me getting back to basics and focusing on trades that are more successful for me, you'll find that I'm going to trade more the opening bell in Europe and the opening bell in New York. So what we might do next week is we'll do a live trading session around the opening bell one day during the week, and we'll let you know in plenty of notice when that'll be. But we'll maybe start at 1:30 and finish at 2:30 as we go through that particular period. As my luck has been this week, obviously we've the Dow traded off 100 points, it's rallied 100 points, and it's a little bit against me at the moment with the last trade. One of the trades, the bigger size trade that I did earlier around the opening bell, was just really to convince me that that's what I need to be doing. That first 5-minute trade, looking at the movement in that period and trying to get in, get out, but with a bigger trade to maximise the impact during that particular period. If you have any other ideas, James is saying an hour is fine. Somebody else is saying 15 or 20 minutes would be amazing. Yeah, somebody said they can't listen to me for an hour. I can't listen to myself for an hour. I'm not sure I'd have enough to say for an hour. So, just thinking about the way that I trade around that particular period, it really is. So if you think the US Open is at, the US Open is at 2:30. Really, the timing to get into that trade is somewhere between 2 and 2:30, and sometimes it can be at 2, sometimes it can be at 2:29. Sometimes if you take the trade at 2 o'clock, whichever way you decide that you're going, you have 2 entries into it possibly. If you short the market and the market falls away, you can buy back and you can go short again close to the opening bell. but the timing of that initial trade would be is the key component of a successful trade around that particular period. And as I say, for me, it's a bigger trade. It's a quick trade. You know, the first 5, 6, 7 minutes, you want to be in that trade, out of that trade. I think maybe over the last number of weeks, well, I know over the last number of weeks I've overtraded. That's very apparent to me. You know, got to knock that on the head and look for better quality setups, trades. And that's usually around it's a DAX trade, possibly a Dow trade, sometime around 7:45 in the morning, and then a Dow trade a Dow trade from about 2 o'clock onwards. So we'll get back to you with the live trading part of it. We'll do one next week for definite, and it won't be a regular time. Somebody was asking, is there? It won't be a regular time. It'll be the US Open. Maybe it's difficult for me to do the European Open. Just I have a school run to do that time of the morning. But we'll do the US Open for definite, and then if we have a big number coming out that week, as I've spoken to you many times over the last couple of months, there are I like to see the move before I trade, and we can have a look at that as well. So a summary of all of that, along with the voice notes, the live bits, is we want to take this back as much as DupliTrade and the trading and the signals or the trades will continue. We want to make sure that we're delivering what we want to deliver, which is more mentoring and real market experience, and something that somebody or nobody else is delivering at that point. So we'll do some live trading once a week, or a minimum of once a week, and then we'll expand from there. Okay, so I think I've answered all of the questions. If I haven't, emailed me and I'll get back to you. There's one small trade left to close down. I am going to run it a little bit. I know that's hopefully my luck changes in the last little bit, and like I said, there were a couple of trades there around the Open just to convince me that that's what I need to be doing more of, rather than the more active trading that we're seeing during the course of the day. So Dave is asking, can you record the live sessions for people who can't make it? I'm sure we can, Dave. You're just asking the wrong person. So I'm sure Sam will get back to you on that, and we'll start those. We'll start those next week. Thank you very much for joining me. Have a good weekend, and hopefully we start next week with a clearer head